CEO Leila Benali, International Energy Forum. Good morning and thank you for joining us.
Good morning, Alexandra. Thank you for the invitation.
Certainly, this is a historic moment for the crude oil. What we saw last year, right at this moment, was incredible. Do you think it's something that will not repeat?
I mean, I think it's an interesting question. It's the first time that somebody asked me whether we think whether the situation that we had last year will not repeat. I think everybody's so fixated about when we are going to get out of this pandemic once and for all that people think that the cycles that we saw last year would be a matter of the past. But indeed, I think there are a few anniversaries that we are celebrating in a way in oil markets and gas markets as well in April. I mean, beyond the pricing mechanisms the pricing signals that you have highlighted, Alexandra, I think it's quite important to remember that in April 2020, global oil demand collapsed 25% in the so-called Black April. To levels we've last seen in 2002. The recovery that we saw after that has been quite spectacular, but we just had a webinar yesterday presenting a report at the IEF where we explained basically that the last mile of demand recovery to get back to the pre-COVID levels will be very slow and uneven. So today, if I take the oil markets per se, and we can talk about gas markets separately, but in the oil markets, I mean, we are standing in that 96.5, 96.7 million barrels a day of demand on average for 2021. And that is still lower than the 101 million barrels a day that you had in 2019. And transportation as a sector was disproportionately impacted by COVID-related restrictions. So as long as you have those restrictions in place, as long as you have a discrepancy and differences between countries, you will continue to have the transportation sector, be it road transportation, but also aviation, being badly hit when it comes to demand. So I think the main question that we are having today is that we are having I would say a very slow recovery when it comes to demand in this sector. Of course, I don't have time today to go through all the continents, but there's also a huge difference between countries. And one area where we saw there's a major difference between the three agencies, the EIA, IEA, and OPEC, who track demand on a real-time basis. It's on non-OECD demand where they have the major divergence. They have roughly 360,000 barrels a day of difference in demand growth in non-OECD demand for 2021. That's roughly the consumption of a country like the Philippines. So it's very difficult today in April 2021 to come and assess demand when it comes to oil. And in the meantime, investments on supply have been taking a big hit, as you know. Last year, the sector have seen a decrease in 25%, 30% across the board in capital investments and OPEX as well. So I think we have all the ingredients for additional volatility in the next few months, the next couple of years, indeed.
Well, this is going to be extremely interesting. I just wanted to remind everyone that today we're going to see the API weekly crude oil stock. So it's going to be also interesting data. I was wondering what's driving the price action at this moment. Do you think it's the demand supply, or it is the OPEC, or it is imports, Chinese imports, US shale oil?
Well, I mean, it's everything, and beyond supply and demand fundamentals, you have supply and demand fundamentals indeed, and all the ones that you have listed. Plus, we're starting to see another issue in the market, which is anything related to infrastructure and logistics. I mean, there's a Libyan port today that is being shut down, so the Libyan production is getting below 1 million barrels a day. So, and I think the issue that we had in the Suez Canal a couple of weeks ago is just a reminder that our logistical infrastructure has already been suffering before the pandemic from lower investments that they should have. But during the pandemic, several ports and shipping lanes have been undergoing through huge amounts of stress. And that's also from that perspective, I think it's quite important to keep that in mind. So I think beyond the supply and demand fundamentals, there is a trade issue that we need to look at, and also the paper market. I mean, we had that in 2008, if you remember, Alexandra, where Brent has hit the $143 per barrel in the summer, in July, before coming down to $30. I think a lot of it is also related to the fact that you have financial players coming back to the paper market in oil, and that's another area that is definitely there impacting oil prices. So I think it's all of the above, but it's reflecting. I mean, the market is relatively well supplied, even if the inventories have come down. The market is still relatively well supplied.
Another extremely interesting topic is the energy transition. We did see President Joe Biden extremely committed to it, and not only also the European Commission. I was wondering, do you believe that this kind of greener economy, if we can call it like that, might have a negative impact in the medium to long term on the crude oil price, or is it something positive?
Oh, well, I mean, I think I cannot give a short answer to your short question, Alexandra. I think there are a few things at play there. I mean, the first thing is the amount of money and stimulus packages that you have in play. It's true, the stimulus package that the Biden administration has put in place is impressive, and I think the U.S. economy can only benefit from this type of stimulus packages. The European Commission has also equally a quite large budget, the $2.1 trillion over the next 7 years, with more than $1 trillion just earmarks for private sector investment for net zero. But I think an agency like ARENA, who is tracking the amount of investments needed to reach net zero, is quite telling that you need. I think the numbers that they had issued recently is that the world will need to invest more than $4.5 trillion every year in the energy system to achieve climate neutrality by 2050. So I think on one side you have the amount of investment that you need to inject in the energy sector is quite important, and on the other hand, you have some of the myths that are prevailing in this industry, and inside and outside of the industry, that are working sometimes against the transition that we have. So, for example, one of the myths that I see a lot in the energy industry and even beyond, in the financial industry as well, is that the demand for oil and gas can only peak and decline, and that is the only trajectory possible. And if you look at the supply and demand fundamentals at play in oil and gas markets and how specific sectors will behave in the future, I see more of an undulating plateau rather than a peak and then a cliff. So that's one example of a myth that you have, because it has major implications on corporate business plans and investments plans that you have in the oil and gas industry and in related energy sector. The other myth that we encounter a lot is that it's possible for one technology breakthrough, and I was listening to your discussion before about electric vehicles, but we have the same sort of myth prevailing in the energy industry and beyond, is that you need only one technology breakthrough that will solve all the problems and would lead to net zero in 30 years. And I think many international organizations and players have already pointed out that first you need the whole battery of technologies, including carbon sequestration, CCUS, carbon capture, utilization and storage. You need direct air capture as well. You need energy efficiency throughout the value chain, from on the supply side and the demand side. And also the IEA has always said that 50% of the technologies that you will need to reach carbon neutrality do not exist today yet. So I think it's quite important to see that you need to develop that ecosystem of technologies to be able to to reach net zero. And then the third myth, and I'll stop there with my myth, is that investors have been abandoning the sector, the oil and gas sector or the energy sector as a whole, because of ESG risks. And that's not necessarily true. I think it's a sector that is undervalued, and the investors have been abandoning the sectors over the past 10 years because it has not been given the dividends to shareholders that it was supposed to give relatively to other sectors like IT or real estate or technologies. So I think everything being relative, I think the pandemic and the crisis, the economic crisis and the financial crisis that we had last year, that we continue to have, is totally restructuring all these sectors. And I think we will be surprised by the new type of energy sector that will come out, the winners and the losers that will come out of this crisis.
Well, this is extremely interesting. Let me ask you one final question very briefly. Do you expect anything different from the OPEC on 28th of April?
I think they need to decide. I mean, it's not for me to comment on a sister organization indeed, but I think they are still talking about whether to hold the GMCC, the GMMC and the OPEC meeting at the same time, or leave the OPEC meeting later on. But I think nothing has changed as far as we are concerned. Everybody's tracking demand on a real-time basis to ensure that the supplies are coming to the market at the right time, wherever they are needed, with all the constraints that I talked about at the beginning of this call.
All right. Thank you very much, Leila Benali, International Energy Forum. Thank you for joining us, and of course, have a great day.
Thank you, Alexandra. Thank you so much.